Hello, everybody. Welcome to Wednesday. The S&P 500 was up 0.14% today as we continue our climb here through the Santa Claus rally. And not a lot happening today, actually. It was kind of a slow day altogether. Might be a good time for me to discuss kind of what I see happening in the market right now and what I'm hoping might happen, at least for the early part of next year. So one of the things that you have to understand about what I'm talking about here is that I search through about 2,300 exchange traded funds on a regular basis. I pull those out of Morningstar, and these are baskets of stocks. So like the S&P 500, you can buy it with Vanguard through a ticker symbol called VOO. You can buy all 500 with one trade. So that's what an exchange traded fund is. And so I look at that on a 2-day, 1 week, 1 month, 3 months, 6 month, 9 month, 12 month, 2-year and 3-year basis. So, and I overweight oftentimes when I'm looking at those on a screening basis, kind of the more current data. Right now, I'm overweighting a lot more the 3-month because I think it's been interesting. We had a big run up and a kind of a drop back and a recovery. So that's an area I'd like to see who survived that, who did well. And one thing I will say, if you look through all of these different things, is how many pieces are not doing well. I have a top 200 list that I keep on. This program that you see behind me is called Think Pipes, and I have 200 ETFs and stocks that I follow pretty closely. I'll flip through those charts, and I use the 6 different screens to look at different time frames, a 3-month and a 1 year, look at weekly data and daily data, different indexes and what have you. And so I flip through all 200 of those. There's an awful lot of really good ETFs from last year that are doing very, very poorly this year. So, last year was innovative technology, genomics, and clean energy. All of those have been really hammered this year. So I'm not a bottom fisher. I don't come in and try to buy low. I look at that as trying to catch a falling knife. Personally, I know that people do that. I'm a momentum player. I like to see things that are doing well in hopes that they continue to have momentum and continue to do well. So what I'm seeing right now, first of all, is the major indexes are doing a lot better than a whole lot of these different ETFs. So your, VTI, which is the Vanguard Total Stock Market Index, has done very, very well this year. VOO, which is this, the S&P 500 from Vanguard, has done very well this year. And so those are big staples inside of my portfolios, as well as the ESG versions of those. So ESG is environmental, social, and governance. I think a lot of people are missing out by not studying those a little closer, in my opinion. And so there's versions that are ESG screened of the total stock market index and ESG screened for the S&P 500. So those 4 areas, total stock market, normal and ESG, S&P 500, normal and ESG, those are 75% of the portfolio. They're doing well. They continue to do well. The momentum's there. I think that's a really good piece. And so the rest of what I look at is really these targeted indexes. And so right now, what I see moving specifically is real estate, semiconductors, and large tech stocks. Those are the 3 main areas that I would be focusing on and will be focusing on. They're doing really well right now. They've done well over the last 3 months. I expect them to continue to do well, at least for the first part of next year. There's a lot of good reasons behind some of those and why they're doing well, what I call the theme, but the trends are definitely there. So anyway, that's what I'm seeing right now. Interesting times as usual. We'll have to see how things play out. Lots of fascinating things that could happen in 2022, but those are the areas that I would be focusing on and will be focusing on going forward here during this first part of next year. So look forward to seeing what's going to happen tomorrow. I'll talk to you then. Thank you.